Well, thanks for watching with us. We're here with Jeff Beckley. He's a CPA, and it's a very big day because the tax bill is starting to make some progress
Passed
and
the
get
House
passed.
today, yeah.
It passed the House. Well, there was actually some kind of technicality, so it has to be revoted on tomorrow, but it will pass the House.
Right.
Okay. Question. Let me start, and then we'll start taking your questions. Who does it make the biggest difference for?
Well, it's certainly going to be a big difference for those folks that own corporations that have higher income, but it's really going to positively affect all taxpayers.
I mean, is there something in it for everybody?
There really is.
How come?
Well, first of all, the rates are lowered for most tax brackets. In fact, the first three tax brackets will be lowered by anywhere from 3 to 4%, and the standard deduction gets raised by double. So everyone's going to benefit that is not itemizing.
So you and I have been through this, but the standard deduction essentially, the first 20, if you have two earners in your family, the first $24,000 of your combined income will not be taxed.
Correct.
And you're going to get $2,000 for each child back in a tax credit.
For 17 and younger children.
You'll get it back.
That's correct.
So how does, there's a lot of talk that this is going to benefit the upper class more than the lower class. Where is that being perceived? Can you kind of explain where that would be seen?
Well, again, I think if you look at the numbers, there's actually across the board tax cuts, so everybody's going to get a benefit, but the kind of the real dollar savings is going to be on the folks that pay the most tax, which is going to be the high income earners.
Okay, so that's how it works out in that respect.
Exactly.
Business questions. Let's start with that. I'm a small business owner. I've got, two people working for me. Where are my savings going to be?
So actually, you're going to have several different savings points, but the most talked about is the tax deduction for pass-through entities. So if you own a S corporation or a partnership, you're actually going to get a 20% deduction on your taxes for that income. And then the other area is going to be an immediate expensing of certain fixed assets. So that would be your computer equipment, your furniture, fixtures, those kinds of things. You'll be able to write those off immediately as you purchase them.
All right, do you have any questions? Are they popping up here?
Yep.
Okay, why am I not seeing that?
I can do it if you want.
Yeah, I'm not seeing, sorry guys, I'm not seeing. Oh, here we go. Are they popping up here? Okay. Oh, except now I'm hearing myself, so hang on, we're gonna have to pause on
It says,
this.
how does the tax bill affect those that are self-employed? And have a salary plus pass-through income. Is that what you just...
Right, so the big change there, of course, is going to be the deduction, the 20% deduction on self-employment income, which is going to affect most pass-through entities positively, so they'll be able to get a bit of a write-off for that pass-through income.
Somebody's asking me, Jeff is asking me, what about Medicare?
So Medicare, really, there's really going to be no impact on Medicare. Now, medical expenses are going to be similarly deductible as they were in the prior year. However, with the standard deduction being raised, it's unlikely that most taxpayers will have a medical deduction. But Medicare is currently not taxable as a benefit, and it would be a write-off for those folks that have a business, self-employed business. It will continue to be a write-off in the future.
Okay, and then what about, with somebody wants an explanation, you get all these tax cuts, how does it affect the national debt? And I think you and I discussed that it's really 2025 that we're talking about, or are we talking about immediately?
Well, so the 10-year impact right now, the Joint Commission on Taxes estimates the budget impact to be about $1.6 trillion. The growth in the economy is estimated to be about 600,000, add about $600 billion back to the tax revenue. So the net effect is about $1 trillion tax cut or revenue decrease over the next 10-year period.
So in 2025, can you explain what happens?
So in 2025, a lot of the provisions of this tax reform actually sunset, and we're going to see more adverse effects at the lower end of the economic spectrum because a lot of those child tax credit, the tax rates will revert back to their current levels right now. So, and that was how it had to be formed in order for the Senate to get it passed with 51 votes.
7 tax brackets, they stay the same. correct? And
Roughly.
they're the same amount of tax brackets. The numbers change slightly, but the tax brackets stay the same.
Actually,
the numbers stay
the dollar levels for each change, especially after the first three levels, the tax rates change. The first three levels go down about 3%, 4% on the third level. The top tax rate actually goes down from 39.6% to 37%.
Will medical expenses be a deduction for seniors?
Medical expenses are still deductible.
They are,
However,
okay.
with the increase in the standard deduction level, it's unlikely that most folks will be able to deduct medical expenses.
Okay, now here's a question. You and I have been through so many numbers today. What about the people making under $30K a year?
So, depending on if they're filing single or married, single taxpayers may have a bit of a tax bill, but if they have children, they'll get a tax credit. They'll likely eradicate the tax bill that they have.
But
for those folks that are married, it's unlikely that they're going to have much tax.
A single person making $30,000 a year is only going to be taxed on $18,000 of it.
Correct.
Because
Correct.
the
Correct.
deduction. Remember, the deduction doubles. It's over 12. It's 12,800,
Right.
and then it's over 24,000 if you're filing together.
You got it. So the net effect, though, on someone making $30,000 is they're likely going to get a tax cut. So they're going to get some tax relief.
Brian Smith's getting here a little late. He missed the early parts. What will happen to the child tax credit? It goes up to $2,000 a
great.
child.
Yeah, so child tax credit gets doubled, and the threshold for qualifying for the child tax credit is doubled as well. So instead of having $200,000 as your cap for earning the child tax credit, that cap now goes up to $400,000. So more families will get the child tax credit.
Who do you think, they talk about that some groups could be hit by this disproportionately. Is there a group you think that will be paying more?
Yeah, so the best estimate I've seen is about 95% of taxpayers will experience a tax cut, or their taxes will stay about the same. For those 5% that may see a tax increase, it's going to be an unusual situation where maybe they live in a high income tax state with high property taxes, they itemize, and the standard deduction increase is not going to help them, and they move up into a tax bracket because of the changes there. So in Texas, it's going to be very unlikely that we'll have many taxpayers experience a tax increase.
Okay, so now let's talk about property taxes. Now, your property taxes that you can write off are capped now at $10,000, correct?
That's correct.
And they were not capped before in Texas.
No, so property taxes were fully deductible previously, but now the limit is $10,000.
So if your bill is $17,000, what happens? Do you have to cough up the extra $7,000, or is that going to be possibly in a deduction somewhere else?
The way I understand it is that's actually your deduction will be limited to $10,000, regardless of how much over $10,000 you are, and so you'll only get the deduction for that amount. The remaining portion over the $10,000 is no longer deductible.
So it'll be taxed as income tax?
It will be taxed as income tax. That's correct.
Okay. I'm sorry, go ahead.
Michael has a question. Married couple filing together, combined income around $100,000. How much tax can I expect to pay?
Well, there are a lot of factors that are going to play into that.
We played with a very similar number for this earlier,
That's
125.
Exactly right. That's exactly right. But I think kind of the rough calculation, assuming standard deduction, assuming no children, dual income, $100,000, I would say the tax relief would be somewhere between $1,500 and $2,200, somewhere in that range right there.
And when can people expect to start seeing this in their paychecks?
That's a great question. So the IRS has actually put out a notice that they may be able to get the tax tables updated by February. Now, I would expect that to be somewhere in mid-February, but they're used to this kind of legislation being passed in December, and they've got to come out with new tax tables. But taxpayers should expect to see more take-home pay sometime around mid-February.
Corporate tax rate.
Corporate tax rate, top corporate tax rate goes down from 35% to 22%. So we'll see some tax relief there for C corporations.
Anything else?
Yeah, Sheridan wants to know how much do teachers get to deduct?
So there was some talk that the teachers would not be able to deduct their $250 in out-of-pocket expenses. However, that has been actually, I'm watching it on TV right now. That has actually been included in the final version. So no changes on the teacher deductions.
Okay.
So it's just as it was in 2017.
This is an interesting one that we did not get through earlier. If you have a baby this month, do you get the credit on this year's taxes?
So if the baby's born on December 31st, actually if the baby's born on January 1st, you get to claim it as an exemption for 2017.
For 2018?
No, 2017.
Oh, if it's born January 1st.
January 1st.
But
New Year's babies get included in the prior year.
But would it get the 2,000 or the
They
former?
would get the 2,000.
It
Well, no.
It would
The
get the
2,000 credit actually kicks in for
February.
tax year 2018. So if the baby's born anytime before January 1st, 2019, they would be able to claim the baby during 2018.
So this year extends to January 1st.
You got it. You got it.
Let's see what else we got coming here. Married, but my unemployed wife lives out of the USA and I'm maintaining 2 households. Wow. Okay, so
Call me after the broadcast.
you'll have to
here.
get to him after
That's
the broadcast because he's. But I will say this: if you're married, it depends how many kids you deduct too.
Right. That's correct. Yes.
It's also going to depend on how many kids you're deducting. Let's see. Let's see what else we have. How much for kid, Troy? That's 2,000 for kids.
Correct.
And teachers, we just went through
That's
that
right.
as well.
So again, the other thing I'd like to emphasize is if they get the legislation passed that's proposed, this is effective January 1st, 2018. So the tax law changes while they would go into effect January 2018 would not affect the taxes that you're filing for 17 between now and April 15 next year. So the next e-file season will not be on the new tax laws. It'll be the year after that.
What does this mean for an accountant?
Fun. Just loads of fun.
I mean, because there's so much that everybody has to. What is the best way for people to really learn about this?
Well, best way is to call their advisor if they have an advisor. I mean, certainly there's plenty of information on the internet through NBC5, but there are tons of ways to learn about the tax law changes. However, I would say that if you have a simple return, there's no reason why you can't trust that your tax software, your H&R Block and Liberty Tax type provider can do a good job for you. But we would always love to have folks come to our office and have us help them.
The age limit on a child is what for deductions?
Okay, so actually there is a little change in the tax code on that. 17 or younger, you get the child tax credit. If a child is over 17 years old, you actually get a $500 family credit for any dependent in the household who's 18 or older. So that's in addition to the new 2018 Tax Reform Act.
Jeff, we appreciate you.
Thank you.
Thanks for getting
Appreciate
everything
it.
squared out for us. We appreciate it.
You're
Thank
very
you.
welcome. Thank you.
Thank you.